All right, today we're going to talk about the absolutely wild 7-year ride of Tidewater Incorporated. This is a story about how a company in an industry that was completely collapsing didn't just find a way to survive, it found a way to completely dominate.
And that's really the big question we're tackling here, isn't it? How on earth do you look at absolute chaos and find your single greatest opportunity? Well, the answer, it's a perfect mix of discipline, a killer strategy, and, let's be honest, perfect timing. Let's break down exactly how they pulled it off.
You know, to really get how impressive Tidewater's rise is, you first have to understand the wreckage it climbed out of. After the big oil price collapse in 2014, the entire offshore energy world was, well, it was a disaster zone, a complete shipwreck. And look, what came next wasn't just some quick dip. We are talking about a brutal, multi-year bleed-out. From 2018 all the way into 2021, the entire industry was just in an absolute freefall. Spending got slashed, expensive vessels were just sitting there idle, and dozens of companies went bankrupt. It seriously felt like the end of an era.
And the pain was real. Just look at this number. In 2018 alone, Tidewater lost over $171 million. They were literally fighting for their life, right alongside everyone else. But
Here, this is where the whole story pivots. This long, painful crisis, it had this completely unintended, and for Tidewater, an incredibly positive side effect. It basically forced a massive, painful reset of the entire global fleet of ships.
Think about it, right? With no one making money, nobody was building new ships, so the whole global fleet just got older. The banks, they wouldn't touch a loan for a new vessel, so companies started scrapping their old, inefficient ships just to get some cash. And the crucial point here is that this downturn accidentally solved the industry's biggest problem, which was a massive oversupply of ships. It actually created a future shortage of modern ones. So the chessboard has been reset. How did Tidewater capitalize? Well, they executed this incredibly disciplined strategy to build the world's most powerful fleet, not by spending a ton of money, but by being incredibly smart. At the heart of it all was this buy versus build model. See, for years, companies would destroy value by ordering tons of shiny new ships at the very top of the market. Tidewater did the exact opposite. They went shopping for bargains among their bankrupt competitors, snapping up modern ships for pennies on the dollar. They made their fleet bigger, better, and younger all at the same time.
And you can see the results for yourself right here. Tidewater came out of this thing with one of the largest and, most critically, one of the youngest fleets in the world. Their average vessel is way younger than the global average, which is getting close to 20 years old now. That's a massive, massive competitive advantage.
Okay, so what does being the biggest and the best actually get you? I mean, it's not just bragging rights. It means you can move your ships around the globe to wherever the best money is. It means you get better deals on supplies and crews. And it means you're the first company the big oil majors call when they need modern, reliable vessels.
So you've got Tidewater with this incredible fleet, and you've got a market that is now starving for ships. So what happens next? Well, the financial payoff. This is that magic moment where the strategy slams right into the market recovery. And the results were just explosive. I mean, look at this revenue growth. It goes from $648 million in 2022 to over $1 billion just a year later, and then rockets up to $1.35 billion. That's not slow and steady growth. That's a vertical takeoff, and it's all fueled by higher prices for their ships. The secret sauce behind this financial explosion is a concept called operating leverage. And it's actually pretty simple. Once you've paid all your basic costs to run a ship, the crew, the insurance, all that stuff, every extra dollar you make from renting it out flows almost entirely down to profit. It is an incredibly powerful dynamic. And if you want to see that power in action, here it is. Tidewater swings from losing $22 million in 2022 to making almost $100 million in profit just 1 year later. And then they nearly double that in 2024. That's not just a turnaround, that's a financial slingshot.
So what drove it all? Well, this right here is the core driver, day rates. That's the price to rent a ship for a single day. It went from less than 15 grand during the bust to over 23,000 at the peak of the recovery. Now, when you have a fleet of over 200 ships, that difference is absolutely colossal.
But the story gets even better. Tidewater isn't just a simple bet on the oil cycle anymore. They very cleverly positioned themselves to benefit from 3 different, very powerful engines of demand.
The business model is really a three-legged stool now. You have their core business in offshore oil and gas, for sure, but then you have this major growth area in offshore wind. And finally, you have this incredibly stable long-term business in decommissioning old oil platforms.
And each one of these legs plays a really unique role. Oil and gas gives them that massive cyclical power when things are booming. Offshore wind, that's their strategic move into the energy transition. And decommissioning, that provides a steady, reliable source of work that has nothing to do with commodity prices. It makes them so much more resilient.
Okay, so let's put on our investor hats. What does all of this mean from that point of view? Let's translate this incredible story into the bottom line. What's it worth, and what are the risks?
Valuation for a company like this isn't just one number. You have to think in scenarios. In a base case, with the market tight like it is, the company looks pretty fairly valued. But in an upside case where the ship shortage lasts for a long time, there could be some serious gains to be had. And the best part? Even in a downturn, their strong financial position gives them a cushion that just didn't exist in past cycles.
So for anyone following this story, think of it like a dashboard with 4 key dials you need to watch. Number 1, without a doubt, is day rates. Then you've got fleet utilization. That tells you how tight the market really is. New ship announcements? That's the big warning sign that the cycle might be about to turn. And finally, you have to watch what management does with all the cash they're making.
And this quote right here just sums it all up perfectly. Tidewater gives you that powerful, thrilling upside of a cyclical recovery, but it's all backed by a structural discipline that was literally forged in the fire of that 7-year downturn. It's a really rare and a really powerful combination.